To be honest, I don't believe in retirement. I think you should work till the last day you are alive and kicking, or till you have the capacity to work. So it again becomes a very challenging task when you put your money in the stock market or in equities. How do you do it?
Is more money in some ways a headache, a detriment?
There is no easy quick fix to become rich. So I would rather have my money in the bank, or rather than get stuck with some small thing.
Hi everyone, welcome to the Gold Tellers podcast series, Money Confessions. And very thrilled today to have a very special guest with me today, Vivek Hinduja, a very well-known entrepreneur, the ex-promoter of Gokaldas Exports, an avid investor, real estate investor, angel investor, dons a lot of hats, and has many business interests. And the best part is that our association goes back at least a couple of decades. And very few people can boast of the kind of investing experience that Vivek has, and no one better than him to actually, come on the episode of Money Confessions. A lot of his insights on investments, mistakes, etc., will surely be an eye-opener and a big learning for all our listeners. So, welcome Vivek on this episode.
Thank you for having me on your
Great
podcast.
to have you.
My
Right.
pleasure.
So, Vivek, as mentioned, you're one of the few people who are part of the old entrepreneurs in Bangalore, and very successful exit in 2008 of your family business, which is Gokaldas Exports, to Blackstone, much before the exit culture came into India. And you've been managing your business interests, your investments, startup investing, real estate, a lot of these things. So the first question which I had in mind, and what's your view? Which is the hat which you prefer to wear more? An entrepreneur, as an investor, as an angel investor. What's that interests and excites you most today?
I think you are comparing apples with oranges. So, when you are an entrepreneur, you have to have a risk-taking ability, and you have to have a mindset of taking a risk. And it's also a question of, how much risk you can take, and what age are you, and where you're willing to go. And obviously, running a business is not easy and requires a certain kind of an effort. Investing is a different mindset. I think you have to be a little more conservative. You have to cool down your animal spirits, as they say, when it comes to investments, because the investments can go drastically wrong. And there are two different mindsets. So, you want to do business, you have to have a business mindset, but investment is a total different mindset altogether. And that's how I would put
So
it.
that's a very good point that you made, which I wanted to ask you. Like, as I meet a lot of large family offices or people with very high net worths, unlike popular perception, they actually say that our risk appetite reduces because of the enormity of capital that they have, because the focus shifts to preservation rather than maximization, which is very against popular perception that people with larger amounts of capital take larger risks. So could you highlight a bit about why this risk appetite reduces as the capital grows?
See, I think there are two sides, there are two aspects to it. One is your age. And as you get a little older, you tend to say that I'm taking it a little more easier in life. I don't need to run around. I have made my buck, or I have made my money, and I don't need to take such risks at a certain stage in life. But then there are people who are, who have started, like, the Nykaa founder. She started her career at the age of 50, and Nykaa was founded when she was at 50. So it depends on how you look at it, the energy level you have, the risk-taking ability you have. And you're obviously if you're 60 plus and you get into that senior citizen category, you don't have that much energy to run around and, run a business, then you feel like saying that, let me take it easy, and I've got enough, and let my money work for me, and I will manage my investments. I think that's the way most people look at it. But if you're still young and you have a huge pool of capital, I don't see any reason why you should not start another venture or get into another business.
Yeah. So you yourself have started multiple ventures. You've been well involved with Gokaldas Exports, then managing your family office. Thirdly, you started paper packaging company, then a tech company called Matrix and Vectors.
Yes.
So you've had a very ringside view of different businesses, right? From manufacturing,
Yes.
different kinds of large manufacturing setups, boutique manufacturing setups, plus the online thing. What do you find? Is there a big difference between the three? And did you find it difficult to adapt from a manufacturing setup to a new age setup?
Uh, Manufacturing I would say, has its own challenges, and even managing tech people and managing a technology company has its own challenges. Uh, Manufacturing, I would say, is more physical. It gets, you have to be on the factory floor. You kind of got to see that the lines are running and things like that. Whereas in a tech setup, it's a very fast changing world. You have to be abreast of what is. It's obsolescence is the problem in that industry. You can get obsolete very fast, and with the advent of things like AI and now Chat GPT and things like that, I think the change is just too fast. The second thing that I find in the tech world, that is to be managing people, especially in 2016, 2017, when there was a boom and there was a high demand for all these kind of techies. I think challenging and mentally getting them down to work was a big challenge, because I think now I think after the pandemic things have eased up and the demand has come down a bit. So I think there's a little sobering in the market. But otherwise, I think it was all hell break loose. The attrition levels were very high, and it was very difficult to control people.
And you think that was much lesser in a manufacturing old school setup?
Manufacturing, it was much less people. There was not the attrition rates are much lower in a manufacturing setup. But then again, manufacturing has its own challenges in terms of managing supply chains, getting in the material on time, getting out your finished goods on time. So manufacturing has a different mindset, and managing a tech company has to have a different mindset.
Okay. If you were to pick one, if you were to restart your life once again, what would you pick as the one path?
If I had to pick one today, I would pick something like I would neither pick tech, and I would neither pick manufacturing. I would pick something like trading, and this is where I'm trying to look at it now.
Sure.
That where are the trading spaces? I've started trading a little bit into garments again.
Okay,
I've started a little bit into fabric. I've done some agri trading, and I think that's a better off and a more, I would say, a mid option between both these very tough worlds of tech and manufacturing. I think trading is far more easier.
Right.
And you have to look at niche sectors where there are enough margins on trading, and this is where I'm kind of focusing on. I think even service as a sector is a better place to be in.
Right. Yeah, this is what most of our larger clients also collaborate with.
Yeah.
And so, Vivek, now coming to your investing journey, I think very few people have had the kind of investment experience that you had. So we'll start with your early days, when you took over managing the affairs of your family office way back in the, around 2009 or 10, I guess.
Yeah.
How was it, how different a world was it in terms of moving out from managing day-to-day affairs of a business and suddenly moving into managing your family office investments, financial markets?
And it was from a very action-packed world, I got into a very passive world. So it was very challenging. It was a very boring job in the beginning. There was not much to do. But I think now, having been in it for at least 12 years, I can say that it is a changing environment, and your mindset, you have to keep changing also, because the geopolitical factors are changing around us, the economic factors around us are changing. So you have to keep your eyes open and be at it to see where the opportunity lies, and you have to grasp where the opportunity is. So I think that's where you have to keep your eyes open. It's not so much on a day-to-day. You're not so engrossed on a day-to-day basis, but there and there you have. It's more of a research-based passive role where you sit and look at things and where opportunities can come up.
Right. And over this last 15 years that you've been actively involved with managing your family offices, could you help understand various aspects of it? First being, what was your best investment and your worst investment? If you could maybe take us through some examples and your emotional conditions and your learnings from them.
So I'll start with the best ones, which you said.
Sure.
During the pandemic, the Sensex went down to 30,000 and everybody spelt doom and gloom. And then I said that this is not going to last forever, and I put a good sum into the equity markets. And from a year from there, I was, laughing all the way to the bank. I think that I will never probably see a time in my life like that again, where, in a span of few months, things changed so drastically. And I really took that opportunity, and, it was such a great thing that, God had, I mean, I'm not saying the pandemic was good, but had you entered the markets at that time, I think you could have, really made a money of a lifetime.
So to dwell more into this, incident,
Yeah.
what is that separated you that you were able to exploit this opportunity? Because a lot of people actually forget buying into it. People had to sell off for reasons of liquidity or even fear. What's that you attribute in terms of your skill or your emotional quotient being higher than others? What is that you attribute this decision to?
So, see, I'll kind of believe that doomsday cannot last forever. And ultimately, we all say the world is coming to an end, the world is coming to an end, but the world still carries on. So, with that kind of a feeling, I always felt that, obviously there is a pandemic, everybody's been hit by it globally, the world had shut off, the whole world had come to had closed off, but it would not last forever. So at some point, I knew it would rebound, and it was a question of, as you said, if you didn't have any liquidity requirements and you had the holding capacity, it was it was a no-brainer. If you ask me, that was the right time to get in.
Okay, but I think you might have seen such dips in the past also,
And not to this extent where we fell so fast.
Okay.
Yeah, but I remember the 2008 crisis, again, the same thing that had happened, but then we had to wait at least a couple of years till the market bounced back.
But you did not possibly behave in the same manner. So is it the experience of seeing a few cycles that helped you?
No, I have not seen a cycle like that actually
Okay.
from the pandemic. But I think it was just an opportunity which I think anybody should have taken. It was a no-brainer for me.
And did you feel scared?
Yeah,
did you lose sleep over that?
No, I didn't lose sleep, but at some point, sometimes I would ask myself, am I a little worried? The whole world is pulling out, and then here I am going in, and am I really doing the right thing? And because everybody was saying me this, it was doom and gloom all around, and everybody was saying, the equity markets are going to go nowhere from here. The markets are crashing, and I was going in at that time, so I was like, I did ask myself certain times, am I doing the right thing? That crossed my mind. So but then I just stayed put. I mean, I just went with my feeling that this is going to get over at some point. It won't last forever.
Yeah, nice. And any space? So this is only on a generic macro level. Any micro investments that, if you have in mind, which did very well for you?
Well, I know people will laugh at me at it, but everybody says government PSU banks are the worst banks. I'll tell you one. If you say from a micro investment point of view, State Bank of India has been my best and till today, I think
we have discussed that many times.
Many times, I think it is still the best. It has given me the best returns for a long time.
Okay, interesting. And you had the patience to hold on to that stock despite that stock not doing well for many months and many years.
Yes.
So how did you build this conviction of holding on?
No, I did not. Actually, I bought into it first time in a big way during the pandemic.
Okay. So that was one of your vehicles to invest.
Yeah, that was during that time. So I invested in a big way, and obviously, the nature of the beast is such that you can't always buy at the lowest and sell at the highest. So at one time, it went down below my buying price also. But then I had the conviction that this is going to bounce back, and it bounced. When it bounced back today, you know where it is. It's so
wonderful. And Vivek, on the other side of things, like on your bad investments, both macro, micro. What's that?
We had the National Spot Exchange fiasco about, I think, 10 years back in 2014, 9 years back.
Yeah.
I think it was a learning for all of us in terms of it was an outright scam. It was not being regulated by any government body like a SEBI or something like that. And I think it was an eye opener for everybody that, we can't jump into things which are with very high returns and with being unregulated. It was too good to be true.
Right.
And the learning that I got from it is that these too good to be true things turn out to be fiascos. a thing giving you 16-17% every 3 months. But, it was too good to be true. That was one, and then the ILFS crisis was another one, where actually the ILFS crisis was a bad one to take in terms of it was. I would say a system failure in our country in terms of the credit rating agencies giving it a A rating with so much of debt on their books. So we when we are buying a debenture or a preference share of that company, we kind of look at credit ratings, and when the credit ratings themselves are wrong, that was a big question, and that was put a big doubt on the entire system of our country.
So that maybe made you look beyond the ratings when you're
and
investing.
then the other point was that now when we make any investment, if there's a credit rating given, I ask which is the credit rating agency, because now the reputation of the credit rating agency also comes into question.
And maybe you have to do your own homework also before investing.
So you just purely cannot go by the credit rating agency. You have to actually get down to brass tacks and see how much is debt is there in the books and things
That's
like
a
that.
very good point.
Because ILFS was a shocker, if you ask me, because all the credit rating agencies had given it at least a single A.
Yes.
The papers
I think more than that, if I recollect
yeah.
right.
Yeah, so it was the
It was
ILFS
the highest rating.
ILFS was a systemic failure of the country, I would say.
Yeah, it had a lot of cascading impact.
Impact, correct. So those were one of the couple worst investments that I've had. One was the National Spot Exchange, and ILFS was another one. Two experiences that I've had.
Yeah. I think you might have had experiences with BOI AXA credit fund.
I didn't invest in that.
You did not invest in that fund, but you had ILFS papers.
I had ILFS
which got completely belly up.
Yeah.
Okay.
But then again, I had purely gone by the rating of the credit rating agencies.
Yeah. So Vivek, on the return side, over this period of a decade and a half that you've been investing, what's the average return that you've generated, keeping in mind these accidents that you had, and the split between equity and debt returns, if there is a broad number that you have in mind?
I think if you get 9.5-10%, I've done fair enough.
But what is that you have achieved in actual terms?
Yeah, around 9.5-10%.
Which is the combination of
equity and debt.
9.5-10%, and with a mix of how much equity, how much?
I would say with a mix of, when I started managing the portfolio, the interest rates were very high. At that point, the GSEC it used to be 9+, and the interest rates were very high. So you could easily make a 8% plus return post tax. Now it has become very difficult, and in the last few months, obviously interest rates have gone up again. But there was a time 3 or 4 years back when the interest rates were very low. So the debt market was actually dead, if you ask me. And the only other option to look at was equity, because ultimately you have to still kind of try to beat inflation to get a positive impact on your portfolio.
So 9.5 is what you're saying. And
I think you're doing pretty reasonable if you do a 9.5 return on your...
With a split, maybe 40-60.
Yeah, a 40-60 split between equity and debt.
So 40% equity and 60% debt.
Yeah.
Vivek, now coming to a slightly... so a lot of retail investors, when we meet, they are very, very excited about doing direct equities, future and options, crypto, and all of these things. And people lose a lot of money there. SEBI released a report 3 months back, where they said 90% of F&O traders lose 1 lakh on an average annually, and these are retail investors. So I have seen a lot of large portfolios, and making money through direct equities is not as easy as it looks like. What is your advice and your own experience with such asset classes, and your advice to our listeners?
See, when it comes to direct equity, I would say stick to blue chips. Stick to names which you cannot go wrong. When you're experimenting with a new name, a mid cap or a small cap, we do not, as outsiders to the company and geographically very diverse location, ours is a very big country, we do not know what's going on within the four walls of these companies. So I would say stick to the blue chips. If you're doing direct equity, you can't go wrong doing an Asian Paints. You can't go wrong, doing a Bajaj Finance. But if you want to really go deep down, you want to play the mid cap space, you want to play the small cap space, then you have to go through either a mutual fund or a good PMS, things like that.
Okay. And the experience of NSCL, did it help you, stay away from asset classes like crypto?
To be honest with you, I never understood this crypto. So I decided to stay away from it for the simple reason I didn't understand it. And every time we read articles in the newspapers saying that the RBI in India is not approving it as a digital currency. So when the government of your country is not approving it, then it is better to stay away from it. There is no point jumping into something which is not official. As simple as that.
That's a very good point. In fact, I at the podcast with Nitin Kamath, he had the same view that anything which is unregulated, we do not advise investors to even look at.
So we just stayed away from crypto.
Yeah. Okay.
And coming to your questions on futures and options, futures and options is I've done a little bit of futures and options, and if you ask me, it's very difficult to lose money in futures and options. The biggest drawback when you do futures and options, and why I don't
Lose money?
Yeah, it's very
Okay.
difficult to lose money, I would
Okay.
say, in futures
Okay.
and options. The taxation is 35%. So if I buy and sell in a cash market where I'm being taxed even at short-term capital gains at 15%, why will I want to do futures and options and being taxed at 35%? Anyway, the returns on futures and options, unless you're doing a very, very, running into crores of rupees, the returns will be, a few lakhs. But if you're doing it in a very small way and then paying a 35% tax on it, if you ask me, it doesn't make sense. So for a retail investor, I would say stay away from future and options.
So you would, to come back to your earlier statement, you would mean it very difficult to make money in future and options.
It's very difficult to make money in futures and options. I would say because of the taxation also being high.
Right. Yeah, so that's a big deterrent.
Because the income tax authorities look at it as that you're a trader and that's your business. And once you get into your business, then you're taxed at your 35% or whatever. And
Right.
so it's not that they won't be treating it at 15% short-term capital gains tax.
Yeah, sure.
So that's a major drawback when you do futures and options.
Right. Now we're coming to some other asset classes that you have been involved with. Big asset class, real estate, that a lot of retail investors, mass affluent investors, they feel that they feel very jealous of people who have made money in real estate.
Yeah.
2-3 questions. You've been a real estate investor since a long period of time, and very, very few people who have invested all sides of real estate, whether it's land, whether it's commercial real estate, residential real estate. So you have seen it all. And what's your view on real estate investments? What kind of money you've made? What's your advice to investors who want to dabble into this?
Real estate is again very tricky. You've asked me 3 questions: land, residential, commercial. I'll start with residential. Residential real estate is good if you're buying it for self-use. If you think that you're going to buy it and it's going to appreciate or you're going to get a good rental yield return, I think you're doing it for the wrong reasons. The rental yield returns, your money in fixed deposit gives you higher returns than a rental yield on a residential apartment. Coming to appreciation, the last 7 or 8 years, we've hardly seen appreciation. I think now there is some level of appreciation that is taking place in residential apartments, but it does not guarantee that to go out and buy a residential apartment. You will get similar appreciation. As I said, you put your money in a bank fixed deposit or in a fixed income scheme, you learn the same thing. There is no point in going about buying a residential apartment. So I would strictly say that, unless you're buying it for self-use, you get into residential. Otherwise, don't buy residential. At one point, I used to have 30 apartments and I sold all my inventory.
Wow.
So it was difficult, but then I said, I just cleaned it up and I said.
And did you make money on these?
I made money on very few.
Very few.
Where my entry point was low, I made money. Where the entry point was at market price, I could not make.
Okay. I think this is a very good learning for people, where people keep asking us, real estate is a good investment, but someone who has had, the benefit of investing into 30 different residential apartments is coming and saying that, they did not make much money on that. So that's something to be really, listened to with great detail.
No, as I said, residential, real estate is not a gold mine. It's very tricky.
Very tricky.
The location counts, your entry point counts, all those factors count. I've done extremely well. I would say, the happy point has been my commercial real estate investments. I have done a lot of investments in Pune. not in Bangalore, because Bangalore, I don't think any builder leaves any jam on the table for an investor. So my commercial real estate in Pune has paid me off with a lot of handsome returns in terms of both rental yields and also appreciation. Uh, Land is another.
But sorry, just
Yeah.
to pause you on the commercial side now, do you think because of the size and scale that you enjoy,
Yeah.
has that been a catalyst to you doing commercial? I mean, because of the sizes, is it advisable for a small person to do it?
Uh, See, a small depends on the ticket size a person is willing to invest.
Okay.
Today, uh, if you ask honestly to ask me what do you get in Bangalore city for 10 crores, I'll say in 10 crores you can't do anything. So it depends on the ticket size that you're dealing with. You know, when if a small timer has only 5 crores to invest or has a couple of crores to invest, question is what kind of commercial real estate can he get into? I would not advise him to get into commercial real estate because he'll go and buy one small 1,000 square feet and the third floor of one small building, which if the tenant leaves and goes, it will be a hard struggle to find a tenant and things like that. So I would rather have my money in the bank or, uh, rather than get stuck with some small thing which, if you're not able to afford it and you're getting stuck with it, it's extremely,
And what about
extremely difficult.
fractionalized real estate?
I don't believe in that.
Okay. Any reasons for that? Because that's something which a lot of
No,
financial influencers also said. Of course,
yes.
personally also, I
Personally,
completely despise that.
see. I have my own personal I have a big holding of my own commercial real estate, so I don't see any reason for myself to get into that fractionalized commercial real estate venture. So I've stayed away from it.
But what about retail investors? Do you think that
A retail investor also need not go into that today. They rather buy there are enough commercial real estate REITs which are listed today on both on the NSE, where if you're looking for a dividend yield, you can sit at home and get it, and you can liquefy it for the click of a button. So why should you get into that and get stuck with it and tie yourself up with somebody with some unknown commitment?
right? And actually, that's a very good point. Unknown commitment and uncertainty.
Yeah, like if you say
And illiquidity also.
Illiquidity. See, today, if you see even the REIT by the Rahejas, Mindspace,
Yes.
the 60% is held by the promoter himself.
Yeah.
So you know that when 60% is being held by the promoter, he's very much interested in running the show.
Right.
You rather have a REIT where you're getting a decent dividend yield post tax, and you rather be there. And when you want the money at the click of a button, you get it. I would rather, for a small time investor, I would rather buy a REIT. So you automatically you're buying into commercial real estate without actually taking the headache of managing the real estate.
Great point. Yes. Now coming to unlisted equity and angel investing. So how has been your experience with both of these asset classes?
Well, some good, some bad. Everything is not hunky dory. So I did a couple of investments with Farm Easy. And today, what has happened with Farm Easy, so it's not been.
But the good thing is you have done possibly a very small amount.
A very small amount. Then the good things are that I've also invested in companies like Incred Financials, which have gone to a 4 to 5x. So I think the main thing when you do angel investing and unlisted equities, I think see, we are all human at the end of the day, and we tend to get carried by euphoria. And especially when times were euphoric. 2-3 years back, this whole startup space was very euphoric. And from the last 2022 and 23, we've seen suddenly a reality bite taking place on all these startups. So I think the important thing is not to get carried away by euphoria.
And you're also an investor in Gold Teller as well.
Yes. So I would say don't be, have your feet to the ground. Don't get carried away by euphoria, because euphoria, then your capacity to think diminishes. So you shouldn't get carried away by euphoria. But as I said, we are all human. We are run by emotions, and we do tend to get carried away. So that's the time when you should restrain yourself.
Right. Last point on the financial investments. What's your view on international investments and gold? What kind of percentage do they command in your own portfolio?
I'm gold. I know gold is at an all-time high, and but I don't invest in gold because your returns can be good. You can again get it through a normal fixed income scheme. You don't really have to buy gold or buy a gold ETF to get those kind of returns. So I rather stay. I've not really bought gold. And
And international investments?
International investments, yes, I did. I have done once some through mutual funds, through the fund of fund routes, and I bought a couple of tech shares on the US, which were my dream shares to own, and especially when the Nasdaq fell down very recently. So they have done well for me.
Okay.
But the taxation on the fund and funds, you have to hold it for 3 years and things like that.
Which is also now
yeah.
behind us.
So it's tough.
And so, Vivek, that's now one big challenge which everyone is staring at is succession planning. When you've got investments, how do you ensure that the investments, are received by your dependents at times of need and in case of any unfortunate events? So, how do you plan for transmission of wealth?
See, this is a very, very difficult question to answer, and it's also a very personal question.
Right.
Everybody's situation in life is different. So depending, there is no one size fits all kind of formula for succession planning. It is depending on your situation, your life, or what age you are in. You will have to start planning. But as you said, if it also depends on the relationship that you're having with your children. I think that's another very important factor. If you're you know that you can trust your children, whether it be son or daughter, and you can part away with some of your wealth during your lifetime, I think that's not a bad move to make. But then if you feel that your son or your daughter is not going to treat you well, if you part away with the wealth with them and things may turn ugly, then there has to be a way of the wealth being passed on only after the demise of that person. Right. So I think everybody's situation is very different, and you'll have to plan according to your situation.
Very good point. Yeah.
And the other thing is that I have been the father of two girls, and I know at some point that they'll have to, I'll have to see. Nobody's here permanently,
right,
and we all have to make an exit. So I have taken some good insurance policies where they get a handsome sum, and luckily I did it before March 31st, where it was tax free, so that some amount, as being girls, at least they get certain amount tax free every year in their hand. So I have at least started planning, and I've put some huge amounts so that they get very good return. They are comfortable for the rest of their lives,
irrespective of what happens.
Irrespective of what happens. So I did that before March 31st because I think at some point anyway I'll have to give them everything. So why not give it to them a little bit?
Right.
As I said,
Got it. Now, what's your view on retirement? I mean, so now you have been there, done that, donned a lot of hats. Do you think the kind of pressures that you take in terms of managing the family office at some point of time you want to outsource that, relax more in life? What's your view on retirement?
To be honest, I don't believe in retirement. I think you should work till the last day you are alive and kicking, or till you have the capacity to work, or you're capable of working. It is very important that you keep yourself mentally busy, and it may not be that you may not want the challenge of running a business, but I think it is extremely important that you keep yourself busy, whether it be running a family office or you want to go and do some philanthropic work or whatever it may be. But I think it is very important that you keep yourself busy, because I think one should work till the last day of their life. I mean, that's my personal take on the matter. You should be active physically and mentally. That's how it should be.
Right. And Vivek, now coming to some of your, as we come to the end of our podcast, I would like to ask you some of your best and worst, like what's your best book, worst book if you like reading, best podcast, worst podcast, movies, blogs, fund managers?
Well, in our country, when it comes to fund managers, I don't think a lot of them have outperformed the market. So, if you go to see a lot of the fund in the mutual fund industry, or whether it be a PMS, I don't see a lot of them outperforming the market at all. So it again becomes a very challenging task when you put your money in the stock market or in equities. How do you do it? So if you're a retail investor, I would still say just go with the blue chips, go with the no-brainers, and I think you will be safe, because at the same time, you want growth, but you want safety also. So I would still say stick to that.
And index funds?
Index funds, yes, you can put your money in index funds. They are the best way to handle it today. I think if you can, and if they are giving you index returns, and if you it's going with the market, I think that it's fine. Your expense ratios are less,
Right.
so I think it's pretty fine if you go with index funds. They are gaining popularity, and I've also put some money in index funds.
Right.
So it's very, very. Actually, I would say put your money in index funds because the market moves, the index fund moves. You'll go with the market.
Right. And any best book, blogs?
I keep reading in the Gavaskar's book when India won the World Championship of Cricket in 1985, and Ravi Shastri was.
On the Audi.
He got the Audi car. It was a big thing at that time when he was declared the champion of champions. And he was he had taken over the mantle from Kapil Dev at that time, and he wrote a small book, very small brochure, like a magazine, I would say.
Interesting.
And the very first line in that book he wrote, like they asked him, what are your views on winning the World Championship of Cricket in Australia, and what have you to say about it as the captain of the winning team? So he said his very first line was that however good you are, you need an element of luck to win, and that luck is God. So I think the same goes with investments. You need a little bit of luck.
Very well said. Yeah. So thanks a lot. I think that's extremely interesting insight. Now, any other like best movie, best songs?
Well, I am a Hollywood fan. Love to watch Bollywood movies.
Right.
Love to dance to Shah Rukh's tunes.
Okay.
So,
any favorites?
there are many.
But still, anything that you can pick out in terms of the best movie and song?
No, I love that movie Three Idiots.
Okay.
I think it's a lot to do with the reality. A lot of good movies. I love to watch these Bollywood movies, and
Right.
vivid Bollywood fan.
Okay. And lastly, as we go, Vivek, what does money mean to you, and what advice will you give to people who are trying to manage their money and use money to meet their financial and emotional goals?
See, I would not say money is not important. Money is important. It's not important. It's very important. But if you ask me, money is important up to a point. That's what I would like to highlight. If you ask a person whether you have 1,000 crores or whether you have 2,000 crores, a person having 1,000 crores will say, I do everything what a person who has 2,000 crores does. So it's important for meeting your daily needs or your necessities or the kind of lifestyle that you want to lead. But after a point, it's just a numerical figure in the bank.
Is more money in some ways a headache, a detriment?
It depends, like the way you look at it. I think you should also, as I said, it's not. You should not treat it like a headache. It can become a headache, but you shouldn't treat it like a headache. And as I said, at some point you'll have to say that this is what I'm happy with, and that's about it. You can't. It can't buy you happiness in terms of whatever you need to do. You can do with 1,000 crores. You don't need 2,000 crores,
or even with 10 crores.
Yeah. So exactly. So, everybody's figure could be different.
Yes.
You may say that, for me, 100 crores is enough and I can live life, or I can do whatever I want with 100
Right.
crores. I don't need 1,000 crores.
Right.
So, with whatever figure that you have in mind,
Right.
I think after that, you'll have to say that the money really doesn't matter to me. But then to get to that point which you feel that you're satisfied, that's important, because you still need to live your lifestyle which you want to live.
Right. Because I have seen you have a very modest lifestyle, and I think.
Yeah, to be honest, I am as I am.
Right.
I don't try to, different things give different people pleasures.
Right.
So I live the way as I want to live, and there's nothing that hinders me from, tomorrow if I want to go for a holiday, I can go for a holiday. Tomorrow if I want to go anywhere, I want to go and see a particular, let's say I want to go see the Eiffel Tower, or I want to go and see Niagara Falls. I can go and do it. There's nothing that stops me from doing all that. So, it depends how you perceive it.
Right. And your advice to investors about money and how they should manage it?
There is no easy quick fix to become rich. You'll have to go through the pain of taking time. It takes time. It takes time to grow your wealth. And like any other business, investment also, it will grow slowly and steadily. Don't try to get overnight rich. That would be my sincere advice, because this overnight richness things, ultimately you end up losing money. So it's better to be safe than sorry.
So thank you so much, Vivek. I think it was super enlightening. You spoke your heart out, and I'm sure for all our viewers, this episode will make it. I'm sure it'll make it easier for them to manage their investments and wealth.
Thank you.
So thank you so much.
No, thank you for having me on your
Pleasure,
show.
pleasure.
Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.